Hey everybody, welcome back to the ChatArgos, our weekly podcast. At least we try to make it weekly. My name is Patrick Tan, the General Counsel for ChainArgos, the blockchain analytics firm made famous for outing the fact that BUSD was under-collateralized regularly for about $1.4 billion US. With me, as usual, is Jonathan Reiter, our CEO and Chief Data Scientist. So this week, me and John are going to talk a little bit about TUSD. We've got lots of questions about that. I know you guys want to know more about that, especially given that the attestations, for what it's worth, were released about 2 days ago. Help you make a bit of sense about that. Can you even use TUSD in a meaningful way, or especially if you're not, if your size is not size, to quote to quote somebody. And also we'll talk a little bit about Coinbase. We want to talk a bit about Coinbase, their retorts to the SEC, questions of jurisdiction, and about securities in general, and some Form D filings, which make a lot of interesting admissions. Now, as much as I would love to talk about the recent interview of crypto's most powerful women, to quote the Bloomberg piece, this is not a gossip column. So I'm probably we're just gonna leave off of that. We just want to talk about technical stuff. We want to talk about stuff that's on chain. We want to talk about stuff that's verifiable. We want to talk about stuff that you can use our tools to go and have a look at, and how that informs either your trading decisions, investment decisions, whatever the case may be. Legal strategy, yeah. So let's just jump straight into it. Let's talk about TUSD. What did you think about the attestations that we got over the past week?
Okay, so I think you're referring to someone found
an API leak.
That one of the API endpoints was still working and returning information that's interesting. So TUSD used to run on their website a listing of the amount of tokens outstanding across chains, and then the amount of money at each of about a half a dozen banks. They disabled that a few months ago, in part because I found some weirdness there, I think. I found weirdness. It's because
most likely because we talked about it.
Manual and other.
And so, the minute we found it, it disappeared.
So someone found GitHub updates showing that the endpoint was probably
Fudzy, actually. Fudzy, Twitter handle Fudzy. Yeah.
And it looks like if you go look at what's coming out of that API endpoint now, there is still data regarding the banks, and there's interesting information here in that the bank list has changed, the custodian, whatever, the people holding the money has changed, and the amount of money may not be quite enough. Now, we know that this is not a production API, so it's possible, in particular, as far as the totals are concerned, banks might be missing, the numbers may be out of date.
Yep.
So I really don't think we can lean too hard on the total not matching properly, because this isn't something they're claiming as production. I do think the list of banks, and at least something about the quantities in there, probably means something, because I don't think it's totally made up data. It doesn't look to be totally made up data. So it's interesting, right? So at a high level, what we find is that the bank composition has changed dramatically. They exist almost entirely offshore now.
Yep.
So First Digital, a large Hong Kong operation, they used to hold a bunch of their money.
Yep, it's missing.
Missing from the list.
Yep.
A bank in Switzerland, a very small bank in Switzerland, has appeared, and Prime Trust is gone. No meaningful amounts of money there. The amount of money listed at Prime Trust matches roughly the $25,000 whatever dollars that they have publicly disclosed is the amount of money left there. So it does look like this thing is somewhat hooked up, at least, and we can take something from there. It's possible, for example, that First Digital is missing for some reason that has the missing money, and it's a couple $100 million, and actually we shouldn't infer too much about the money being missing.
Correct. And for our viewers who may not be entirely familiar with this sort of concepts, basically, even though there's an API out there, there's an endpoint. If somebody on the other end of that endpoint doesn't maintain it, doesn't properly hook up some of the data that you require to feed out through this API endpoint, it can mean anything, it can mean nothing at all. Yeah. Now, if we were to take this API endpoint at its face value, what we do know, at least based on what we can see from this API endpoint, is that the whole TUSD machinery, if you will, has gone offshore, and that's consistent with the fact that you don't see a lot of redemptions.
That's right. So people were complaining they couldn't mint and burn, and TUSD was saying publicly, well, yes, you can. We have plenty of on-ramps open. Fair enough. If you used to use a U.S. domestic bank payment facility on-ramp, off-ramp for doing the stuff, and all of a sudden it's moved to a Swiss bank and a trust company in Hong Kong and some operation in the Bahamas, maybe a lot of the people there aren't able to KYC, aren't able to onboard with that operation. Certainly not quickly, and they're probably not even prepared for it. So it is consistent with it always having been functioning on-ramp, off-ramp in some level,
Yep.
it not having been functioning for a lot of these people, and the entire operation having migrated from, domestic U.S. Look, if you're making a domestic U.S. payment to their custody provider to mint these tokens, the KYC process is pretty mild because it's coming from an account at some domestic U.S. bank, whatever, it's ACH payment, and it's for a small amount of money. It's okay. If you're trying to do these wires to and from banks in Switzerland and the Bahamas and whatever weird trust companies, that's going to be more challenging.
Yeah, of course.
More questions are going to be asked. Flowbank, the bank in Switzerland that has appeared on the list, is going to operate through a network of correspondent banks. Their balance sheet at the end of 2021 was 100 million Swiss francs. It's clearly gotten bigger, whatever. But this is not a $100 billion major operation. They don't have international banking presence. They just don't. They're small.
No, I mean, TLD...
Correspondent banks won't be able to process the stuff. It's a whole mess.
TLDR... I had to say this again. If your size is not size, if you're not a sizable customer, you don't have access to these offshore banking facilities. If you're trying to redeem like 10,000 TUSD, that's just not happening.
Certainly not with no notice.
Yeah.
So we are starting to get a better sense of what happened here. Assuming everyone is completely honest, they just yanked all their money from the United States, put it in a whole bunch of offshore jurisdictions, didn't really do a very good job communicating that to a lot of their customers, and those people in practice have probably lost access to the money. They'll have to sell the tokens on an exchange and withdraw as dollars because they're never going to be able to onboard with these places. I mean, they could try. It seems unlikely. It's a oftentimes in the end when you find out what happened, it all makes a little bit more sense and nobody was really lying. But there are also, of course, allegations they don't have all the money. We'll have to wait to find out about that one.
I think that one's a tricky issue because I think it's important to bear in mind that until fairly recently, TUSD was a non-starter as a stablecoin. Nobody gave a shit. Nobody was paying attention to it. Yeah. We monitored it, but that's because we knew that, and we've always known that minor stablecoins are tributaries to major stablecoins.
Yeah, it's an on-ramp, off-ramp. The entire thing was an on-ramp, off-ramp for larger players in the first place. Again, who would be perfectly happy onboarding at whatever Swiss bank or Hong Kong Trust Company or something. That all seems consistent with the past behavior of the product. Now, this is now the zero-fee base currency for most of what Binance does. They're listing more and more pairs every day, and it's becoming bigger in a lot of that sort of corner of the exchange world. Coinbase, I believe, recently announced support
Kraken.
Kraken announced support for TUSD on Tron.
Yeah.
So, okay, I mean, it's a big product, right? In some sense, a couple $1 billion of this thing were minted. Take them at their word that it's real. I guess Kraken should be involved in that because it's a large part of the operation. If it turns out this money is not okay, it just means that the infection is sort of spreading more widely. Maybe we're relocating away from, U.S.-based banks and Ethereum to Tron and offshore banks. That's a different kind of financial system, but, future of finance, it might be. Sorry.
So, okay, and that's a point that we want to make, which is that some of you guys have observed that 50% of all spot trading of BTC on Binance is TUSD. But that makes sense. You would expect that because there's no fees.
It's effectively the native token. It's the biggest exchange. There's no fees, right? It's the native token. There's no real surprise. They can't have BUSD anymore because that name was taken. So now TUSD just is BUSD. Okay. And most of the other exchanges have been whacked.
Correct.
I wouldn't read much into that.
And that's the point we're trying to make. I wouldn't read too much into that because it's something you would expect.
Yeah. I do think that it represents a existential risk for large parts of the ecosystem.
Yeah.
Because this thing is not fantastically well managed and is suspicious, right? If it turns out that those suspicions are grounded in reality and there are very serious problems here, a lot of things are going to get taken down as a result.
So speaking about accurate representation or reflection of reality, what about the network firm, which we know is Armanino LLP, in a different brand?
Yeah, okay. So the people who used to work at Armanino, who did a lot of crypto auditing, who were, among other entities, they were FTX US's auditor, not the FTX offshore auditor, whatever. They audited a number of things that have blown up quite badly.
Yep.
So maybe not the most reliable, Arthur Anderson 20 years later kind of a situation. a lot of some of the team there that was covering the crypto space moved over and set up their own new company called the Network Firm. They've been running these attestations. So in my opinion, they've been signing off on really, really questionable stuff for quite a while.
Yep.
They're continuing to sign off on what are just really blind sort of, here are all the tokens and we have the money. No details at all. They're still putting their signature on it. So supposedly they're seeing some kind of supporting information as regards Prime Trust, the Nevada-based trust company that's gone under, is in insolvency proceedings, and there's been money stolen.
Receivership or something like that.
Whatever the process for trust companies is in Nevada. The network firm had stated that they had seen what their balances were, and it was $25,000 whatever dollars. Yep. So they're receiving access to more detailed information than the general public or their clients are. Presumably they still have an ongoing relationship and are doing something reasonable like that. It remains to be seen if... I mean, look, there's only so many questionable audits you can put your name on, or attestations you can put
before
your
you
name
lose
on,
your...
Before there's a real problem with your license. I don't know that they're doing anything wrong. I think that they're becoming more concerned. I
think if you look at... So the attestation, if you will, is available on the Archblock website. You can get that. It's 3 pages. And there's sufficient caveats and sufficient ambiguity that this doesn't really tell you anything at all.
Yeah, okay. So I think there are issues with sort of general code of conduct and practice, whatever, for the accounting industry, where you're not really supposed to issue statements that you know are completely worthless and caveat them so that nobody can hold you down. So I wonder if there will be some changes in practice regarding some of this if it turns out to have been fraud. Not that they're part of the fraud, but that they, a fraud was perpetrated on them as well. It'll be interesting. I mean, the last time I referenced Arthur Andersen for a reason, right? Arthur Andersen was Enron's accounting firm and disappeared as a result of a lot of that trouble. And I wonder if, and the industry made changes to clean stuff up and whatever procedures were made different. We may see some of that here where people were effectively snowed over by things that were not illegal and were not wrong, but also in the end the statements were maybe not very useful. The true dollar attestations and the exact details of what's going on behind them are likely to turn into a fascinating case study for what an attestation should and should not be. And auditors around the world will probably be taught about this thing because there's a lot of weird stuff going on here, and it feels extremely unlikely the answer is it's all good and they're just move fast and break things. It doesn't seem like that.
Okay, so fair enough. Like now, if you look at TUSD, and if TUSD is meant to be the functional replacement for BUSD, and in light that TUSD's primary user, at least right now, appears to be Binance and Binance's trading, how does the SEC ongoing SEC action against Binance and possibly a DOJ suit that's on the horizon against the founders of Binance? We don't know about that, but we know that it is possible. And
okay.
How does this affect
So
TUSD?
the first thing to say is if BUSD is a security, then almost certainly TUSD is a security.
Yeah,
not just because they're spelled similarly. So it's not going to help you in terms of avoiding some of the SEC type problems to migrate coins.
Yeah.
Now, if this off-ramp doesn't really work, or there's no way for them to feed money in and out of the United States, the ongoing scuffling regarding Binance US's assets versus Binance offshore assets, that may become challenging on all sides. So let's say that the U.S. government secures some kind of injunction preventing Binance from removing assets from the U.S., but a lot of those assets now consist of tokens that in effect can only be redeemed outside of the U.S. How does that situation resolve itself? I don't know. Are they told that they need to change what their assets are? Some of this really is novel. I mean, dollars generically are transferable anywhere in the world among, proper banks that have dollar bank accounts. The idea that you'd have sort of special tokenized dollars that can only go to certain places and try to geo ring fence that, I don't know that people really know how to deal with it. It's going to be an interesting sequence of questions. You could make the argument that this was an attempt to just funnel the money out that way.
Yeah.
We'll find out. I don't know. Certainly the TUSD folks and the Binance TUSD relationship and the Tron TUSD relationship have shown a remarkable ability to move quickly. So whether they will be able to escape the net, such as it is ahead of them, remains to be seen. But we're watching a game of cat and mouse right now as they're being chased from place to place.
Speaking of game of cat and mouse, I think just as we're recording this, we saw 74 million TUSD redeemed and an additional 4.4 million TUSD redeemed that is alleged to be tied to Justin Sun. So and that goes to the earlier point, which is that redemptions are possible, but your size is not size.
Yeah, so a lot of this seems to work only for a smaller number of more institutional type, whatever, large players. When things say Justin Sun, they usually just mean Tron related. So Tron DAO, Tron, whatever. Whether that's him or some team or whatever is a separate question.
So
yeah, it may only work for them, which is...
So I had a question. So if, and as has been alleged quite popularly, that Tether is in bed with Binance. Now, I've never really been convinced that that was the case, because if that had truly been the case, then it would kind of negate the rationale at that point in time to do the whole BUSD stuff. And increasingly, like, let's say, for instance, you lost access to BUSD, you would think that then if you were in bed with USDT, the natural functional equivalent would be Tether. So why would you move into TUSD?
So I agree very much with that. So, okay, I'm going to say some things these are just sort of assumptions based on, assuming people who know each other or from similar backgrounds or work together might be related, right? So we know that lawyers who worked at Alameda Research, FTX, and Tether are former colleagues in previous places. So it is in no way surprising that those guys ended up coming back together and doing stuff together. People do business together.
I mean, they get the band together and go back on tour again.
There aren't really any connections known on that level among the Tether folks and the Binance folks. There certainly were with Alameda.
Yeah.
Whether there are connections among the Tron people and the Binance people, we don't really know, but they certainly seem to have cozied up really quickly. And there's always been suggestions that there was some stuff going on together there a longer time ago. Also, those are both products that had historically focused on the Chinese language market, the Chinese market, and lots of cross-border whatever stuff in China. So it is very believable that they'd have ended up kind of allied with each other. Again, the Tether and Alameda guys were clearly involved, Genesis Block, were clearly involved in China cross-border capital flows as well, but definitely from a different perspective, because you were looking at a bunch of North American and European folks who were dealing with this, formerly some kind of electronics businesses, whatever, and stuff that's not the same flavor, whereas the Justin Sun and CZ backgrounds are very much token-driven capital flow weirdness. So I can believe that those are separate groups.
Yeah, correct. And I think the easy analogy to understand that is that just because we're all hanging out at the same bar doesn't mean we're sitting at the same table.
Yeah.
That's literally what this is. You're both at the same bar, you're both drinking the same stuff, but you're at different tables, and you don't generally cross from table to table.
And this is based on sort of soft inferences from social type things, right? This is no real hard evidence.
Yeah, correct.
But this is often the way business relationships sort of shake.
No, I think what would be interesting though is that we've known for the longest time that companies in China that were selling fentanyl precursor chemicals were accepting Tether on Tron, Tether on Ethereum.
Payment documents made
correct.
Now.
Yeah. So what would be interesting is that if in the coming days you see TUSD on Tron or Ethereum being accepted as a valid,
receive copies of the invoices, but absolutely.
that would be telling, that because then so this is something that if you take away nothing from this conversation, but this is something that's important, that is that functionally and ideologically, Tron, any product on Tron is a fundamentally different product than something that's on Ethereum. And that's always been the case, and it's going to continue to be the case, because I mean, if you're on the Tron, I would say Tether on Tron is probably closer to a TUSD product than it is to a
I mean, I guess in the sense that the underlying customers don't want real dollars in the first place.
Yeah.
And I think all of these ecosystems have shown a remarkable ability to find users and they pump up volume. They find a way to get used, right? There's a use case, pump the use case. If the use case turns out to not be fantastic, they may not even realize at the beginning what's happening. We're not alleging these people did this on purpose.
Yeah.
But yeah, it would not be astonishing to find out that, and as we're now seeing them come back together, right, that group had more historical involvement than we knew about, whereas the other side, maybe a little bit more arm's length from place to place. It was surprising to a lot of people Binance didn't choose USDT as the sort of coin of the
But I think that's telling. I think it's telling that they didn't select Tether as a coin of the realm, because you would think logically that's the easiest course of action.
That would have told you they were always the same group, right?
Yeah.
And since it didn't, maybe they were, and it's just a good strategy, or maybe these other guys were more close to that group. And we'll learn as it starts to fall out. We're speculating a bit at this point.
No, we're totally speculating, but I think that it's important that we put out and try to, sort of like characterize some of these, I don't want to say conspiracies, but these postulations. And that has implications in terms of like, if you're a hedge fund, do you trade in TUSD? Do you accept that, look,
if your money's going to be commingled in some common offshore trust with a bunch of questionable stuff, they're going to be clawbacks, whether the prime trust process results in a whole kind of complicated clawback procedure, right? Fraudulent transfer in Nevada is definitely a thing, and the idea that some of that money may end up getting, we'll see.
Speaking of clawbacks, and not to go off tangent at all, but I think it's in an important corollary to this discussion, which is where we saw the liquidator go after Three Arrows, the founders of Three Arrows, for 1.3. So I think this is important because the Bloomberg piece didn't make this abundantly clear. It was a good piece.
So there's a headline, some reporting that the Three Arrows Capital liquidators are pursuing the Three Arrows Capital founders personally for 1.3 billion.
1.3, yeah. So I think it's important to make this distinction. So this may not be known to all of you guys out there, but let's say now, for instance, if you're a director of a company, and you knowingly take on debt when you're insolvent, that can be clawed back. Because
yes, you're personally liable in some ways, and if the transfers are made to you within some time window, they get the money back. There's a legal procedure in much of the world. This is only beginning now. Right?
So
shall we switch gears?
Yeah, let's switch gears. Talk about Coinbase. Talk about securities. Talk about how they're alleging that the SEC has no jurisdiction because they're not securities.
Well, so please.
Oh, okay. So this is an interesting argument to take. They're alleging that the SEC has no jurisdiction because they're not securities, but ignoring the fact that the whole point of this discussion is whether or not the securities.
So, one of Coinbase's arguments as to why the SEC has no standing to sue them is that they have no jurisdiction, no standing, because the products at issue are not securities. And that's fine. If they're not securities, they're correct. But it does seem like a little bit of a circular argument. Some of the stuff now looks more like just generating noise to generate noise. I don't really know.
Well, let's talk a bit about that Form D stuff.
Okay, yeah. So there's also been in the news, so this firm Prometheum that's got some licenses to do some kind of securities trading, they're starting to sort of get out there and talk to people. And there are real questions about whether or not there's much business that they can undertake. So I think a lot of people don't appreciate how much this whole labs structure, so many products tokens are structured where there's a labs, there's a token, there's a blockchain, and then the labs issues a bunch of money and sells tokens to the investors, and the tokens operate on the blockchain. That's sort of the way the ecosystem's organized. A lot of these labs are U.S. companies that filed securities registrations with the SEC. So Prometheum's argument is that people who've submitted those registrations, exempt securities, whatever, there's lots of types of securities that are not IPO type stock exchange listings. They're just things that are securities that are sold to accredited investors and exempt from whatever, lots of disclosure requirements. There are ways to be able to trade them. People who filed Form Ds, the Form D is this registration form. It's interesting to see how this lab structure is going to work in practice now that the government is clearly trying aggressively to argue that everything in the space is a security. So I would say there's sort of three branches of what's happened here, and I'll try to use reasonably well-known projects as examples here. There are plenty of others, but smaller projects people may not be familiar with or may argue are irrelevant. So on one end, you have Celsius, who somewhat famously filed registration documents with the SEC stating that their cell tokens, digital asset, whatever, were securities, and that they were selling them through an exempt offering, so they're securities, they're just exempt from. Well, if you take that form on its face, anyone that listed Cell was trading securities. The securities were registered. The exchange wasn't registered as a securities exchange. It is going to be very difficult for anyone that traded Cell tokens with U.S. customers to argue that they weren't operating on a registered securities exchange. I'm not sure there is a defense for that. It's certainly going to be extremely challenging. Then you've got variants. I'll give two examples here, but variants on this theme, where they didn't check the box other and write digital asset securities, digital asset tokens, whatever, on the form. They wrote something else. So in some cases, the labs raised money through a SAF, so a simple agreement for future tokens. So in this case, we're signing a contract, you're giving me some money, and I'm promising to give you
Tokens
in
in
the
the future.
future if I raise whatever certain conditions. So that agreement has been registered as a security to the government. That does not necessarily mean the underlying thing that will be delivered as a security.
Yeah.
We'll come back to that in a second. And another variant of the structure is that we enter into a agreement for me to just give you tokens in the future. In some cases, they're phrased as, I think it's either Compound or Solana. These are both examples from Compound and Solana. Wrote that they were pre-functionality, whatever tokens. So I'm promising to give you tokens, but they don't exist yet. Once they exist, I'll give you the tokens. That agreement could be a security, it's transferable arrangement,
that arrangement in and of itself, if you've ever read Howey, and I recommend it because it's not a long decision, but that contract itself and the Howey test, that's the exact definition of...
Well, yeah, so those contracts are securities. These people have filled out forms attesting that they're securities.
Yeah.
So there's no argument on that one. Now, you can have an option, a derivative agreement, a swap agreement, a future delivery for gold or oil. And that's gold's not a security.
Yeah,
Oil's
correct.
Not a security.
Yeah.
So you still have to argue whether or not the underlying is a security. But if, in the case of, I believe it's Compound, they had these registration filings submitted for the simple agreement for future tokens. And then in short order, there's a bunch of blog posts and forum announcements and tweets and whatnot about how the governance of the protocol is being transferred to the tokens, and the tokens are allocated pro rata, consistent with the way the fundraising worked on the Form D, on the securities registration documents. That really looks like an equity security, right? So it is not the case that I work at a bank and I want to change databases. I want to change from SAP to Oracle or whatever. And I have to go ask the government for permission. Now, my securities registration statements change. It doesn't work that way. The database records themselves were never securities.
Yeah.
It's the thing of economic substance. If you've said this is an agreement for tokens to fundraise for my project, and then you immediately hand out governance control over your project to tokens pro rata per that at least arguably looks a lot like you're just using the blockchain facility as a database for recording equity ownership in what you've already said are securities. That one is going to be extremely challenging to parse out because given it's the governance process, it's not a commodity. It's not, a piece of gold that just sits there and sparkles. Whether you could make the same argument for Solana, which had these future pre-functionality, they are governance tokens in some sense. You have to litigate that one out, proper Howey application debate back and forth. There are, and I was somewhat disappointed, the Prometheum guy, whose name I don't remember at the moment, who was on Laura Shin's podcast.
Yeah.
I was a bit disappointed he didn't have these examples to hand. There are a lot of labs that have filled out such Form Ds in the U.S. Now, you may not want to lead with Celsius because, Celsius is famously bankrupt, but the government definitely wants to lead with Celsius because Celsius ain't going to send no lawyers arguing, right? Celsius is going to say, we submitted a Form D. We don't need any more expenses. Thank you. We're good. Unregistered securities exchange. That's a great strategy for the government to pursue. Again, Celsius submitted these forms. We didn't submit these forms. There are plenty of examples out there of projects, products, tokens that these people were trying to avoid getting caught by saying my SAFT is a security, but my tokens are not a security. And that is a completely untested legal fine line that, okay, now you're going to have to go argue. I'm not sure if a reasonable fraction of such projects turn out to be scams. No one's going to have a lot of sympathy for that.
Yeah, that's true. No, and that's the whole point. I think a lot of people get lost in the weeds and keep they keep questioning, is something a security, not security. You got to move up a couple of levels and recognize that the whole point of classifying something as a security is that you need to provide certain investor protections. And if a lot of this stuff is statistically blown up and a lot of investor monies have been lost, especially retail money, then the argument for classifying them as securities is a lot stronger, especially in front of a jury, than not classifying them.
Really basic statistics, right? So clearly some reasonable fraction of companies that IPO, that have traded equities anywhere in the world, go bankrupt.
Yeah.
And some fraction of them are scams.
Yeah.
Because, of course they are.
Yeah.
What fraction of ICOs in the 2017 cycle turned out to be scams that went to zero? it's a much higher number than U.S. equity IPOs. Right?
Yeah.
So the judge, the jury, whatever, is going to be very receptive to the idea that 50%, 40%, 90%, whatever, of these things were scams. The protection should just be applied to fix the problem. Get the fraud rate down to 5%, 2%, whatever the fraction of listed stocks that are frauds turns out to be. It's not 50%, right? We know that. I mean, that investor protection argument, which is the purpose of the Securities Exchange Act and whatnot, seems relatively easy to argue here.
And that's the point we're trying to make. I mean, I find that with, especially on Twitter, all of these back and forth about whether something's security or not, trying to look into the minutiae of the how we test and how it fails, the how we test, it ignores the fact that the whole point of these things is investor protection. And if in the past period, investors have not been protected.
And you have situations here where the labs or the foundation has pretty explicitly stated, in some cases there are interviews still on YouTube where people say, the Unchained podcast I referenced, there's a guy from Paradigm on there who said, we use the SAFT structure to avoid having to do this sort of disclosure. If that ends up capturing a reasonable number of fraudulent projects, the judge is going to say, protections apply. That's the point. Whether it makes the price of a token of a project that worked go down is irrelevant to that group.
Yes.
Because what they care about is being able to catch people who committed egregious fraud, stuff went to zero, lied, whatever, by putting in place the disclosures to make that easier. I think the failure to put in all these disclosures makes clear why they went with a disclosure regime in the first place, which is it makes it easy to catch people who lied.
Yeah.
And if you don't fill the forms out, all this discussion about, well, who's going to register? Who's going to do the disclosure statement? Who's going to file? Yeah. If you don't have that guy to go after, it becomes much more difficult to run enforcement. I'm not saying right or wrong. I'm saying from the perspective of the regulator, why do you want it this way? You want it this way so you know who to go after. So you have a reasonably mechanical enforcement procedure. And it seems like they're going to try to retrofit that one. You may, in the end, have been better off not having submitted any paperwork to the SEC and hoped for the best than to have submitted with toehold that has some directors, that has some addresses, and then they're going to come after you. I'm not even sure that's the right outcome. Because if these people genuinely believe what they were doing was a reasonable strategy, and they get screwed, and people who filled no forms out get away, that doesn't necessarily feel fair either. I'm not saying
correct.
That is not how the legal system works. I would apologize if it was my responsibility.
No, I mean, that's a fair point. Like, depending which jurisdiction you're in, some jurisdictions don't classify crypto as anything, for that matter. So if you wanted to run a crypto fund, but you wanted to, avail yourself of all the trappings of something that's regulated, even though it didn't have to be in your jurisdiction, then you have to suffer the necessary consequences. And is that fair? I don't know. I don't think so. But that's the law. You know what I mean? Like, you put yourself up to a high level of scrutiny, but presumably you also benefit from the fact that just because you're regulated, because you're operating to that higher standard, maybe it helps to attract more investors and stuff like that.
Well, I mean, this cuts both ways. So there is currently a lawsuit, allegations, beginnings of a lawsuit flying among a bunch of venture capital firms and the compound guy, Egorov, because they're claiming that he didn't give them tokens he was supposed to. No, sorry, Curve, not a compound, the Curve guy. I think that's correct. Egorov is the Curve guy. Basically claiming that he promised them tokens he never gave them, he promised them stuff he never gave them. From their perspective, having had the securities disclosures and all of that machinery in place would have made suing someone for defrauding you afterwards easier. You can see how he didn't want to pay for it. I'm not sure his intention was to steal. I have no idea what this guy was trying to do, right? But if he was really trying to renege on these agreements, he would want to not have the paperwork in place.
Yeah.
The investors would not want to have to spend money on the paperwork, but now they would like to be able to have that stuff in place. These things kind of exist for a reason. I have no clue which way that one's going to shake out, by the way. But it's fascinating to me that the lack of paperwork is just making this a lot longer. If somebody ran an IPO, trousered a bunch of the money, and the company went bankrupt, it's a pretty straightforward process to get it back. And this happens, right? So,
and on that note, that's all we have for this week. If you've got questions, or if you like us to cover something next week, every week there's of course fresh content, because there's always things happening in the space every week, then hit us up at the comment section below. Otherwise, like and subscribe. We really appreciate it when you guys do it. We know you guys have busy schedules. We appreciate you taking the time out to watch the podcast. Also interesting, we are on Crypto Critics Corner, so look out for the episode that's going to come out, I guess, the next couple of days or so. Soon enough. And we speak to Caspiancy and Bennett Tomlin for an extended period of time. I think you guys will enjoy that, especially if you've been watching this show. You know, we have pretty humorous discussions.
Hardcore fans.
Yeah, so there you go. Otherwise, we'll see you next week. Have a great weekend, and talk to you again soon. From all of us here over at ChainArgos, bye-bye. See you again.